Today I want to talk about luxury homes in the Bay Area. When it's time to sell, it's important to protect what you've built and decide where that equity should go next. In this market, savvy sellers won't make emotional decisions based on headlines. They look at how to use real estate as a bigger part of their wealth plan. I recently spoke with a seller who owns a high-end home and was unsure whether this was the right time to make a move or not. He was watching the market closely and didn't want to sell in the weakness. But once we looked at the full picture, especially the continued interest from international buyers, the conversation changed. It stopped being about fear and started being about strategy. Today, we're going to break down the things that we're seeing in the luxury home market. International buyers are still helping support luxury pricing. One thing many sellers miss is that the luxury home market is not driven by local demand alone. In the Bay Area, international buyers still see real estate as a long-term appreciating asset for building wealth. When prices soften or the market becomes less competitive, they often view that as a buying opportunity. This is important because it helps create a floor under home values even when local buyers become more cautious. For luxury sellers, that means that demand may be more durable than headlines suggest. Luxury real estate can preserve wealth differently than other assets. Based on my observations, stocks move fast and markets react quickly. However, the luxury real estate market usually doesn't react in the same way. A well-located, high-quality property tends to hold value differently because it is tied to scarcity, location, and long-term desirability. This is the reason many high-net-worth homeowners do not look at their property as just a residence. Instead, they look at it as part of their overall asset mix. When handled correctly, selling a luxury property can be less about cashing out and more about preserving value while repositioning the capital. The smartest sellers are thinking beyond the sale itself. I see sophisticated sellers ask better questions. They don't just ask about, can I get my price, but look forward to what the best use of this equity is once I sell. For some, that means looking at a 1031 exchange to defer taxes and shift equity out of a high-maintenance property into another investment that generates income more consistently. For others, it can be moving into a different property that is better suited for your future needs. The sale is only one piece of the decision. What really matters is what the equity does next. In the luxury space, a home sale should never be looked at in isolation. It should be part of a larger strategy to protect wealth, improve positioning, and make your equity work harder for you. If you're thinking about selling and want to talk through timing, buyer demand, or what repositioning your equity could look like, please reach out. I'd be happy to help you think through the options in a practical way.